that all can benefit out of it.
Yes.
Sure, sure.
Yeah. So many people are. We will just wait for 2 more minutes and then we can start. So how is everybody here in Delhi? It is raining very heavily. Delhi raining very heavily today.
Oh,
Here also in Patiala also there is was a heavy rain in
Heavy
today
rain.
morning.
Hmm.
There was heavy rain.
Okay. Very nice. So this this type of series, you see, last time we invited one person from Brazil. So he has given us about the cost and management strategies in the winning companies. I'm sure our members must have benefited out of it. Feedback, if our members give, then we will be in a position to improvise more. And I will request that the members from different regions, Eastern, Southern, Western, and Northern, also should participate in speaking. So that will be a real good time, good initiative basically. मिश्रा जी आप कैसे हैं? How are you, देवेंद्र मिश्रा जी? देवेंद्र मिश्रा जी म्यूट पे हैं. He's on mute. The only issue in online program is that we have to drink our own tea. That is the only point. If we are joining on a physical program, we can all sit together and laugh together. So Nidhi, we can start. It is 3 o'clock.
Yes,
Yeah.
sir. We can start. Good afternoon. I welcome you all. Today we are meeting for the ninth time under the monthly webinar series Discussion with CMA Practitioners. Today we have with us CMA M.K. Anand Sir, Chairman, Professional Development and Continuous Professional Education Committee of the Institute. CMA Gurvinder Malhotra Sir, Speaker of the session. I welcome all of you to this session. First, I request M.K. Anand Sir to address the participants. Over to you, sir.
Thank you very much, Nidhi. My dear fellow professionals, ladies and gentlemen, and our chief guest of the today's seminar, Mr. Gurvinder Malhotra. I welcome you all on our this monthly program where all of us are meeting on the first Wednesday at 3 o'clock. So I will be in Chennai tomorrow. What we are now trying that we are looking beyond cost audit, beyond the scope of cost audit. So we are primarily into the cost audit areas, and all of us are quite trained into that. But there are so many other areas, RERA, social audit, this, that. So I will be speaking on that tomorrow at SIRC also. But today's session, particularly, I have requested Mr. Gurvinder Malhotra, and I am very thankful, Gurvinder ji, for your agreeing to join us and join your own professional colleagues. So stock market is also one of the very big gray area where our members should be aware. I discussed with the Gurvinder ji that shall we tell our members the basics about the stock markets. His opinion was that sir, basics are known to our people, so it is a specialized area, multi-bagger stocks, how to identify and then how to tackle them into that. It is a really very interesting area. So what I am trying to impress upon our members is that we have to increase our knowledge into other areas which are available before the professional accountants. The the distinction between the other professionals and us is dimming day by day, and we are also going into all the areas where our fellow colleagues are there. So I'm sure that by today's series, today's discussion on multi-bagger stocks, we all will be benefited. I am more interested that we should be running a full series about the stock markets and uh, about the stock markets and then about the insurance sector, about the health sector, about all such sectors where we should have a series of discussions wherein our members can participate and members can benefit out of it. So once again, thanking Gurvinder ji. Gurvinder ji is from my city. I am feeling a great pride in introducing him, and I am thankful to him that he has agreed to discuss, and it is a very heavy researcher into this area. So I now our Manoj Singh ji has also joined. Just saw him. I thank you very much once again for joining, and I look forward to the discussions on today's topic. Thank you, Nidhi. Thank you very much for that.
Thank you, sir. Now, to take this session, we have with us our speaker, CMA Gurvinder Malhotra, sir, for discussion on the topic how to identify multi-bagel stocks. Before we start deliberation, I would like to briefly introduce him. CMA Gurvinder Malhotra, a fellow member of the Institute of Cost Accountants of India. He is a founder and CEO of the Contra Investing Research Services and having industry experience of around 15 years as finance executive and more than 10 years experience in equity marketing. We welcome you, sir, and request you to start deliberation, sir. Over to you, sir.
Thank you very much. Thank you for giving me this platform to interact with our CMA members. And I would like to specially thank Anand sir that he has given me this opportunity, and he have been supporting me since long. That and we were discussing that we will arrange some this type of seminars and webinars so that our members can also get enriched with this knowledge about stock market. And I hope, as already Anand has told that we all know about the basic fundamentals of about companies, balance sheet, and profit and loss account. These are our key area we can say. So, but the main point is how to use these things. Basic, we know all everyone we know price earning ratio, current ratio, what is the return on equity, return on capital employed, debt equity ratio. There is so we will I will not cover these things, but I would like to discuss some simple what we can say that some strategies that we can use in identifying multi-bagger stocks. Here we will not discuss on trading, just only for investment purposes. And just before starting, uh, I would just welcome you to again Contra Investing Research Services. And we are a SEBI registered research analyst. And it's myself, Gurvinder Malhotra, and I am MCOM and CMA. So one standard disclaimer is there. Whatever stocks we will discuss in this webinar, that will be only for education purposes. So please don't take it as any buy and sell recommendations. So please consult your financial advisor before making any position. So now we will start just before starting that as a an answer all that we will plan some series of this type of webinar, and already we have been conducting 5 days workshop with our members. So this, if anyone is interested, then I will share my WhatsApp group link that I will share, and this in this way we will conduct 5 days webinar that because today one day is the period is very short to discuss in detail of the strategies. So and but I will try. Yes, I will try to give some brief ideas of these strategies. So these are some key learnings which we cover in our 5 days webinar. So how to apply filters on screener.in. We will use that platform for all these research work, and and we learn how to filter out the companies where FIs and DIs are increasing their holding, where promoters are increasing their holding. So these types of key learnings we discuss in our 5 days webinar, and these are some strategies. And my basic two strategies that I follow is low price to sale. That is the thing. And the second one is 10-year consolidation. These two strategies in and this one also, the gap in growth of stock price and gap in profit and sales. So the main this criteria whenever you are picking for a multi-bagger stock, that is you should buy a stock when it is available at a cheap valuation. So that is the only point. What is the cheap valuation? Normally we use price earning ratio. So we all know about price earning ratio. So that we use much. But instead of price earning ratio, I give more importance to price to sale ratio. So that we will try to discuss in brief in today's webinar. We will take up some case studies for better understanding. So how this price earning ratio work, and the second strategy, that is 10-year consolidation. Some This is the combination of some fundamental and you can say techno funda analysis you can say. So I will discuss some case studies which you can get idea how this journey of a multi-bagger stocks. So I will start with the one company, that is alkyl amine. That everyone I think must have been aware about this company. So this company has given very big returns in last, you have seen last 5 6 years. This has
Sir,
given much.
sorry to interrupt, sir. Are you presenting something, sir? We are not able to see the screen yet.
Sorry. Okay, okay. That I have not this screen sharing. Okay, I will.
Thank you.
Thank you for
Thank you.
pointing out. So, okay, now my screen is visible to you.
Yes, sir. Now it is visible. Yeah.
Okay.
Thank you.
So, first of all, that this site that I will use, screener.in. That please you can note down this name of this site, screener.in. I hope most of you might have been already using this site.
Sir, your voice is muted, sir. Your voice is muted.
Your mic has been muted, Gurvinder ji. Your mic is muted. Uh, Gurvinder, your mic is muted.
Yes, yes. Okay. Okay, now it is okay. So this screener dotting that we will learn how we can use screener dotting for our this fundamental analysis. So there are a lot of features. You can just go through the site whenever you want to study a company. Just type here the name alkyl amines, so that I want to search. So this will open. So this dashboard here, some ratios it is showing here in this table. So ratio I have added as per my I can say convenient, whatever ratios I am following. You can add by typing here. Is there any issue? Is any issue there? No. So any ratio you can add from this add ratio to table from this search box. So for example, I want to add suppose debt to equity ratio. Debt equity ratio, just I will type here and then just click on debt to equity. It will get added to this. Here you can see it is added. Already it is added. Otherwise, if you want to remove any ratio, edit ratios. Here you can remove also. Industry P, debt equity, just I will remove it. Then again I will add so that you can get idea. This is for those who are not using this screen routing, just they will get idea, little bit idea. So how to use this. So debt equity ratio, just how to add. So this is the some basic things, and lot of other features you can go through. Otherwise, in detail, if you want to learn, then we can plan some series on these learning. So today we will focus on these strategies, 2 or 3 strategies I would like try to cover. So first of all, whenever you are going for some multi-bagger research, first you just check the this price graph of that company. This is the, I think this is the initial you should check whether how this stock has performed in the past. So one more thing, I am just just taking you some other topic. One I say, see one story is there that I missed to share. See that is this is very relevant in this strategy. I missed this. So the story is about Chinese bamboo tree. So Chinese bamboo tree. This is so. What is the story about this? See, in this story, what happens, this gardener plant the seed of bamboo tree, so nothing happens in the first year. So but that gardener keep Is there any issue? I am getting some disturbance. Any issue is there? Everything is okay?
There is a echo. Echo is coming. Echo is coming.
Echo from my side is this is it. Is my voice is clear or not?
Now it's clear, sir. Now it's clear.
No, it is okay. So this now we were discussing the story of bamboo tree. So what happened? See the gardener the seed this plant. So but in the first year nothing happens. So but he keep on taking care of all this seed. In the second year also he fertilize it and water it. Everything he take care about it. But in second year also nothing happened, and but he continues his efforts. And the third year also he water it and fertilizer it. Everything he take care, but nothing happens in third year also. So as a for a normal person it is very discouraging, but that gardener know that this is the process he has to follow. So he continues to take care of this seed of the bamboo tree. Then fourth year also he water it and he fertilize it also, and but nothing happens in the fourth year also. And again, and then in the fifth year he continues the same process, and in between somewhere fifth year this bamboo tree sprout come out of the soil, and just within 6 weeks it grows up to 90 feet. Just imagine, in first 4 5 years nothing happens, and in between somewhere fifth year this bamboo tree grows 90 feet in 6 weeks only. So this is the very much relevant about our life also. Same thing happens sometimes. We put lot of efforts toward our goal or objectives, and but it takes sometimes, it checks our patience it takes a lot of time, 4 year 5 years. And similarly in the case of stock market, some stocks check our patience, and they don't give any return for 4 year 5 year and sometimes 10 year also. So that's why that one strategy I has developed, that I named as 10-year consolidation. So that now you will understand that strategy that we will discuss. So now I will take you to this. So first you check whether this how the stock has performed in the last. Just some of the analysts they prefer the stock which is consistently giving return, but my theory is, because sometimes what happens if a stock is going see in this case for example the stock was doing good. For example, if anyone buy at these levels, so he has not got any return. So that is important, that stock should be in consolidation. That is my point. It should be in consolidation. So that I named as 10-year consolidation. You can see the stock was under consolidation from 2005 to 13, 10 year. Then some range was changed. Then again some consolidation. And then you check it. One another thing that I check, that is price to sale. That price to sale also we will check. So now you will see that this stock was trading at a price to sale of 0.45, this type of price to sale in 2013. So after that it started its multi-bagger journey. Now you can see after this it traded in the price to sale of 1 to in between 1 to 2. Then real journey was started from 2019. Then at all time high this price to sale was near about 17. So generally what I have noticed before it's the starting of its journey as a multi-bagger, a stock trades below its the price to sale of 1, and at when it's make a all time high, then the stock goes up to near about 15 16 price to sales. So that we can understand from this the case study of alkyl amines. So and then you can also check the fundamental of the company. That fundamentals were even 10 year back also, when the stock was trading at that you can see as price wise also, or valuation wise price to sale, that also you can see that it was trading at 30 40 rupees, and here all time high was 4800. Then this stock has given more than 100x return in less than 8 or 10 years. So the company's fundamental also you can check. This company was doing very growth rate was also that time near about 10 to 15% growth was there. And this company was doing consistent profit it was doing. And balance sheet also you can see there was not no much heavy debts were not there. And cash flows were also positive. You can see cash from operation is positive. And ratios this company was doing in 2013, ROC of 21%, and shareholding pattern 72% with promoters, sorry, in 2021, and 74% was there. So these fundamental also, and then you can check the study about the business of the company, what the company is doing, what is the business of the company. Then you can go through the presentations of the company, then con call of the company, or maybe you can refer to the annual report also, or just when you got some company, add it in your watch list, then follow its corporate announcements whenever the news about the company. So whenever some big news about come about the company, any big announcement, maybe capacity expansion, maybe big stake by some big investor or mutual funds, these types of news also you can track. So you first, my point is you first find companies which are available at cheap valuation, and for that I use price to sale and long consolidation. So when a stock is going through consolidation, it automatically got undervalued. So lot of weak hands exit from that stock because they just feel that the stock will not give any returns, so they will exit. So what happens, most of the people exit when this stock is under consolidation. But my point is you should enter when the stock is in consolidation, or like in the case of bamboo tree, when the that bamboo tree is coming out of the soil. So when this coming out of consolidation, that should be your entry point. Your entry point should not be in between. Here you should not enter, because whenever you will try to, like whenever you will try to enter on a running train, that it there is a risk of falling down. So getting injured, that the risk is there. So you should not enter here in this journey. You should not enter. You should enter here when the train is just waiting on the station. See these type. This is the this time period. You have to track this stock and accumulate this stock, you can say. So this is my first idea, first strategy that I use, and we can discuss lot of case studies. Relax. So one more case study is there. Lot of companies you will always find lot of opportunities in the market where the very good companies are available at these cheap valuation. So in this case also, in the Relaxo also, you can see in 2011 12 the stock was trading at rupees 1415, and in 2021 the stock made a high of near about 1500. And we will also check the price to sale ratio. Price to sale is same. One more thing I would like to clear. See, price to sale and market cap to sale, that generally we study in our books. That is market cap to sale also. It is same. There is no difference. So as like Al-Qaeda mine, this stock was also trading at market cap to sale of zero point 0.4 to zero point 0.5, and it's all time high. The stock was trading near about market cap to sale of 13 to 14. So just one more thing I will show you how much return this stock has given only due to change in valuation. So this contribution of just change in valuation is, you can see 25 to 30x. This contribution is only due to, for example, 13.5 and divided by, just take as a price to sale ratio of 0.5. 27x the stock has gone only due to change in valuation. Then remaining, for example, the stock has gone 100x. Then remaining just increase in sale. This sale increase only 3.7 times only, and but stock becomes 100x in 10 years. So you need just a company which can grow at the rate of 10 to 15%, and the valuation is attractive. Just you will get lot of opportunity by observing in the market, and even by reading the newspaper also. Lot of companies will come into your notice. See, for example, one company was there, Carisil. Now the name is Carisil. Earlier its name was Acrisil, like name was there. So you will see this company is in the that is Italian kitchen. We can say that it is produce the manufacture this product for like Italian kitchen. So the advertisement appear in the newspaper when just I observed it in last in 2016-17. This stock was I think trading some at these levels. So then you will see this stock now where it has gone up to 1000 level. So then you can just get some idea that this is the trend that is going on now. Every home that these kitchens are redesigned. The old kitchens has been changed to new Italian kitchen styles. So then you can just predict that this is going to the future. So these types of idea you will get from when you will observe in the whenever you are visiting the market. Just keep observing what type of uh, companies you are able to observe. So then you will get a lot of ideas from this market also. And when you are studying the newspaper, there also better advertisement coming. That company something someone attracts your uh, attention. That then just search in the that what this company is doing, what are the sales, and what are the valuation. These things you can check on these platforms or different platforms that you use. So these are some simple strategies that you can use. So lot of case studies that I will show you, that I have discussed alkyl amines. Similarly, Balaji amines. Why I am discussing a lot of case studies, that it will uh, uh, build your convictions that it really works. So in this case also you can see Balaji amines, the stock was just consolidating. So whenever a stock has seen a long consolidation, that is the time that you have to uh, start tracking that stock. Then that fundamentals are good. Here also you can see this Balaji mine was also trading at price to sale of 0.2 to 0.3, and even all very now these are called like blue chip companies, SRF. This also you can check. All companies, these were under consolidation for long period, for 9 to 10 years. SRF also. Now it is a very big company, 77,000 crore market cap company. And at some point of time, this was also trading at market cap to sale of zero point 0.3. That is the time you should track these companies. That is the time. So now these are very big companies. They are more safe. But if you want to make a 100x return, then you have to uh, track these at their initial stage. So these were some case studies that I would like to discuss. So then after getting some these types of companies, then you can go through this fundamental like what is the P ratio. P ratio also you can see at that time this P ratio was only 3-4. That in 2013 it was trading at just P ratio 4-5, or in 14 then it came to 32, and now it is trading at the price earning ratio 60. Now imagine how these re-ratings happen. So first you have to identify companies which has seen a long consolidation and now ready for the breakout. Just wait for some trigger, maybe some big announcement of capacity expansion may be there, or big acquisition may be there, or some stake buying by some big investors, maybe by mutual funds. So these triggers you can use. So and now I will share explain. So how you can filter out these companies. This is the this you have to check. Then I now we will learn that very good feature is there in the screener, that this screen here you can click on the screen and then create new screen. This is a very ultimate feature of the screener dot in. So it will help us to filter out these types of companies. So one more thing, that at that time when the company is small, it stayed at market cap of near about 200, 500 crore, or maybe less than 1000 crore only. So we have to focus on the companies for multi-bagger return whose the market cap is below 1000 crore. So here we will start with our basic parameter like price to sale ratio. So this is my basic that I use whenever I am filtering out the companies. So that should be less than 1 as per my. First I will start with 1, then slowly I can go gradually to up to 2 3 also as the size of the companies increases. So first I will start by 1 or maybe sometime 0.5 also. So for example, I am interested in company with a market cap of less than 500, and just I will add some minimum criteria. At least there should be market cap should be at least more than 50 crore. So first I will try this type. We have to identify the companies which are having price to sale of less than 0.5. So run this query. The list is very long. So to reduce this list, that what we can do that we can add lot of other filters less than debt equity ratio, as we all are aware as a finance background. So it should be lower is better. So in case of small companies, it is better to have very low debt companies. It should be less than 1. Then we can add promoter holding also. So it should be as much higher, that is better. So you can take as 50 or 60%. It is better if the promoter holding is more than 60%. So now there are like you will get 60 companies. So you can continue to add filters like return on capital equity or return on capital employed should be more than 15%. So these types of criteria you can add, and then you will get a list of some small companies. So these companies are having good fundamental, but you have to study the business of the company. So then after getting about the business of the company, then you can just check what is the future of the company. That you can get idea by searching. You can search some. You can take the help of some other research sources like YouTube. Also, you can search. See any researcher has uh, recorded any video on that company that you can take help, or otherwise maybe AI also may be helpful if you are using in your research, or otherwise you that is, but these small companies are not giving any presentations or concourse that, so that these will not be available. So maybe some sources that YouTube you can go, some if someone has made video about this company, that also you can use, that you will get idea. So otherwise, visit the website of the company. And otherwise, see, for example, any company we will open, this Bhagyan, I think it is a good company that I am tracking. So this you can study from here also what the company is doing. Any here it is also given these companies what are the capacity expansion plan is there, any is there by the company. So these you will get basic idea about the company. So and some more point that you can consider while thinking about multi-bagger stocks. One thing is you can note down that some important points. Otherwise, I have tried to make some list here. That ratios we all aware, but here that small equity, that its equity should be small. See, for example, what is the meaning of small equity? It means like I will take some example that you will get more clarity. For example, Yes Bank is there, or maybe a Lok Industry is there. For example, lot of these companies are there. See here in this case, equity capital. Where is equity capital? From here you will get the idea. Equity capital is 500 crore. This equity is little bit huge, not small equity. I will show you as compared to the other company, and even you will able to switch a loan. These types of companies are having very big equity. So these company I don't consider as a multi-bagger. maybe this Suzlon has given very multi-bagger return last 1 or 2 years. But these are generally I avoid these companies like Yes Bank also very big equity. I will show you as we have discussed the price to sale. So the most expensive stock of our Indian stock market, that is MRF. So what is the equity capital of this company? Just I will show you why I am telling that equity capital should be low. See here only 4 crore equity. So it shows that it equity float is very low. It means supply is very less. Supply is less. So we understand in a very better way that this is all a game of demand and supply also. So if the equity capital is very huge, then it means always there is a risk of supply. So if the equity is small, then supply will also be less. And even one more positive thing is if equity is small, so what is the use of equity? Equity, for example, this MRF is having equity of 4 crore only, and even you will see the number of share is only 10 rupees is its face value for 4 crore equity, and the face value is 10. Then number of share is only, you can say 40 lakh only, 0.40 crore. So see, for example, the profit of a company increases by just 50 crore. Okay, though how much EPS will increase divided by this one only, 125 rupees. So EPS will increase by 125 rupees just by increase of profit in 50 crores. But if, for example, the equity is capital is instead of 40 lakh shares, for example, here this 4 crore equity was there. So, for example, it is 4,000 crore. Like in the case of, you can see Suzlon, like lot of companies are there. For example, it is 4,000. Then number of shares will be 400. So EPS increase in EPS will be only 0.125 only. So that's why small equity is very positive for multi-bagger stocks. Lot of all these case studies that we discussed, all these were having small equity also. So this is also very uh, big, we can say, feature of multi-bagger stocks. This also having equity of only 10 crore, alkyl amine, and lot of companies are there, like Balaji Amine was there. So all these companies, these are having equity of very small equity, 6 crore only, and Relaxo also, lot of multi-baggers. So even from recent times, only 25 crore. In recent times, lot of stock, Pondi Excite, one company which has given very huge return and still it is giving. In this case, you can note here only 12 or 13 crore equity is there. So these are some basic ingredients like you can note, if as we already aware about these terms, return on capital employed. So if a company is having return on capital employed more than 15% or return on equity also more than maybe 12%, 13%, that is very good. Or if it is having much higher, that is better, but that is also sufficient. And it should, at that time when you are entering in a stock, that P ratio tries some comfortable, maybe it should be less than 20 or 15 if you are able to get, because at this point of time the market is at all time high. It may be difficult, but still I will show you lot of companies are there which are still available at attractive valuations, which are trading at a PE of maybe less than 15 or 20 also, and having very good fundamentals also. So a lot of companies are there that you can use this query function that we are discussing. Here you can put all your criterias. For example, I want to add here price earning ratio, that I can add less than 20. So all these criterias you can enter here. So you will get list of the companies which are fulfilling these criterias. So these are some basic structure. So now I have searched this in this market cap range. I have searched the companies in the range of market cap of 50 crore to 500 crore. So then we will go one step ahead. After that, we may go for see price earning ratio. That again I will explain this price earning ratio as per my experience. I observed it start from 0.5 or 1 and it goes to 10 to 50. Most of the companies top out at the price to sale ratio of 15, 16. Some companies may trade for some time. They cannot trade for a long time at the price earning ratio of maybe about 20, 30. Just I will show you. Just these cases also we will share. Like some recent listings were there, like Sona BLW. This company, when it got listed, just why I am focusing on you should buy the companies at very attractive valuation. So this company listed in 2021 near about, and this at that time it made high of near about 800, but then it started falling and it made low of near about 380 or 400. So we will check its P ratio also. Just you can imagine here the P ratio was 199 and now it is trading at the P ratio of 70, 75. Still it is expensive, but it has corrected from its high. And its market cap to sale also we will see. It was trading at market cap to sale of 54%. That time I was telling that it is very, very expensive. So now you can see now it is trading at that I say this is the reasonable 10 to 13 because it is a good company. See, this again, I will show you in 2021, the price was 780 or 800, and still it is trading below that price. Even the company has shown very good growth from 2021. You can notice here, sale doubled, more than doubled from 1400 crore to 3000 crore, and profit from 200 crore to 500, more than 500 crore. But still, the price is trading below that. Why? Because valuations were expensive. Lot of case studies we can discuss in same those companies which were listed in 3 4 year back at very expensive valuation. Maybe one company was Amtar Technology. So these are the some cases. Lot of so this was at trading at 2500, still at trading at 1800. So that time P ratio was you can just see 135. Again, it is 140, but price still it has not reached to that price. So even I think this stock company is also doing good performance from the sale of 250 crore to more than 500 crore, but profits are not increasing. That is the reason. So a lot of other company data pattern was there. So all these companies, because these were trading at very expensive valuation, so they have taken a lot of time in consolidation. So that's the reason you should always consider the valuation. And the best part is how to get the right valuation is go for the companies which are in consolidation. That's automatically get discounted. So because a lot of people will exit from the stock because there is no movement, so automatically the price will get discounted. So now I will change some range of this filter. Now I am changing this price to sale of less than one. Here I can change from 500 to 5000. So already we have filtered up to 50. Now we can change to 500. So again, in this range, where what is the issue? So in this range also, now this is showing these companies. So these are not any recommendation, just this is the result of you can say this filter. So you can apply these filter, you can note down. But I will not say that this is the only filter that you have to apply. There are a lot of filters. And one more I will share you. There are some custom designed filters are there. So here you can see popular themes. Some investors have created some filters that you can see here, and you can low on 10-year average earning, capacity expansion. So one this trigger also we will discuss. See when you are searching a company, one more thing that you can check in that company is, for example, the if company is going under some capacity expansion. So these things you can check any or any debt reduction is there. So a lot of these filters are designed. Debt reduction filter is there. So this is pre-designed. By observing these filters, you will learn also learn how to apply. So how to filter the companies where the debt is being reduced? So debt means current debt. It less is less than debt 3 year back. So it means in the last 3 years the debt has been reduced. So it has combined with this the capacity expansion also. Gross block greater than 1.2. It means increase in gross block by 20%. For example, if any company is doing capacity expansion, where the impact will come in the balance sheet, that impact will come in the fixed assets. So any capacity expansion, that it will increase the assets of the company. So that we can filter out with the help of increase in gross block. Gross block is increased by 20% from the gross block preceding year. So these types of filters you can apply. And here also one separate can say the filter is also given for capacity expansion, that you can also study about this. You can also use this filter. So FI buying is also given. So how to filter out the companies where FIs are buying? Just the change in FI holding by 1%. So 1% you can change it to 1%, 2%, 3%, 5%, whatever percentage you want to filter out. So even here this FI is holding minus change in FI holding. So these types of some formulas you can apply to filter out the change in FI's holding, or you can change it to DI's holding also. Instead of FI's, you can apply for DI's also. So these also you can use. You can apply for promoters also, promoter holding. So change in promoter holding is there. So all these types of filters you can apply, and lot of useful filters are also available here for filtering out quarterly result. This is also very useful. I would again like to mention here. See, the companies which are posting good quarterly results consistently for the last 2 3 quarters, there are a lot of chances that these companies can be multi-bagger. So this filter can also be very helpful. So that also you can note down. This is how this filter is designed. See, it filter out the companies where the net profit latest quarter. This is the recent quarter which have just we have seen June 24. That is the latest quarter. Then net profit is greater than net profit proceeding quarter. That it means March quarter. For the June quarter, preceding quarter is June 24. Oh, sorry, March 24. Then again, it will check net profit preceding quarter is greater than net profit 2 quarters back. These filters are available in screener. You can see. So net profit 2 quarter back is greater than net profit 3 quarter back. So one this strategy is also very useful. So that these strategies you can use. I have also here I have made a list this for all these strategies. So low price to sale already we have discussed in some brief how you can use. So gap in growth of stock price and growth in profit and sales. So first one I will take small break. Any doubt up to this level? Have you got some idea? Any doubt is there? Otherwise, I will move to the next strategy. Any doubt is there about how we can use price to sale or like 10-year consolidation? I have discussed. Why any question is there? Okay, shall I move to the next topic? Okay, so next one thing is this is strategy I am going to discuss is very simple. What I in this strategy, what I check that is in some cases like one case study we can discuss, that is like ITC. You can see. See, same here also apply all strategies applies in case of ITC. For example, the stock has not performed for last 7 8 years. So here you can see the stock was consolidating, and what this strategy is about gap. What is the gap that I am discussing? Gap means, see, for example, the stock was trading here. You can see at near about 200 to 250, or even you can see just point the all-time high of the stock. Just for example, here in case of this ITC. all-time high earlier, all-time high was in 2017, that is somewhere 357. So just come here after 3 4 years in 2021, the stock was trading at rupees 200. Okay, and even if you will go back here in 2013, this is a gap of 8 to 10 years that I name as 10-year consolidation. So here in 2012-13, the stock was trading at 200, and after even 8 to 10 years, stock was available at same price. So this is the 10-year consolidation. So now we will come to the our next point, that is a gap. What was the gap? So here you will notice in 2013, this company was doing sale of 31,000 crore. You're able to see. So, but in 2022, the sales increased from 31,000 to 60,000 crore, near about double. So sales double in 8 9 years, and profits also doubled from 7,700 to 15,000 crore. But stock price was trading at the same levels. And in 2013 also it was trading at 200, and here also it was trading at 200. So this was the gap in the value growth or stock price. So these also you can use. Lot of cases are there that I can discuss here. A lot of case studies for this also, like a gap in stock price and uh, this growth of sales and profits. For example, one company was Kaplan Point Lab was there. So here you will see the stock, this previous high. Just whenever we are finding gap, just first point out the previous high of the stock. Previous high, it made a high of near about 7 800 in 2017. So this is our first point. So in 2017, the price was near about 700 to 750 or near about 800. So again in 2023, near about after a gap of 6 7 years, the stock was trading at 600 rupees. So it is available below its previous highs. Now we will find the gap. What was the gap? In 2017, this company was doing sales of 400 crore. So, but in 2022, this company was doing sale of 1200 crore. Sales more than 3 times from 2017. And profit from 96 crore to 300 crore. 3 times. Profit also gone 3 times from 2017. But stock was available below that, below the price where it was trading in 2017. So these are some gaps which you can find. So I will again share, explain how you can filter out these gaps. Hope you have taken the screenshot, or maybe you can note down in your diary, so that you can practice these type of filter. So now I will show you how to filter out the company. Otherwise, okay, is there option to chat also? I will post it in the chat. 1 minute, so that you can note down. 1 minute. Chat. Okay. Chat option is not there, I think. Okay. Okay. You can take the screenshot. Okay. So now I will share how you can find the gap, where the gap is there in the growth of growth in sale of the company, and growth in profits, and in the growth of stock price. So simple thing is, for growth, what to we have to find that return. This is the how this is defined. Growth is defined by return over 5 year, or you may take as 5 year or 10 year or 7 year, any period you can choose. Return over 7 year, the return over 10 year means this growth by the stock price, it should be less than by, that is growth in the sales or growth in the profit. So profit growth, 5 year or 7 year you can take. So it will help you in finding the gap in growth. So Here you can just make some minimum criteria in market cap. For example, 5,000 crore market cap, the companies which are above the market cap of 5,000 crore. So here you are able to get more than 182 company. Then you can apply some further filters so that this list can get reduced. Otherwise, you can go through this list. Lot of very good fundamentally good companies will be coming, because I have chosen here the market cap of more than 5,000. So mostly these companies are some well established companies where the market cap of more than 5,000, or otherwise you can add some more criteria like debt equity ratio, that also you can add. Otherwise just go through, a lot of good companies are coming. Like again, still Caplin Point Cap has not grown whatever growth it has seen in last 7 years. So this is also there. Black Box is there. Imami is there. Mahanagar Gas is there. Asian Paint has not seen that growth. So these types of filter, lot of you can see good companies, the Hindustan Unilever. This just we will take some any example from this list. Let us. Okay, for example, Mahanagar Gas. Okay, we will try to discuss what we were trying to find. But here actually this gap is given only for 5, 10, 3 years. Okay, that also we can compare. You can observe here this in 3 year, this company's sale growth is 43% and profit growth is 28%, but stock price growth is less than 16%. So in 5 year point of view, this sale growth is 17%. Here we have taken profit growth or 19%. Profit growth is 19% and the sale growth is 17%. So on the basis of 5 year also, this stock has not seen that growth as per the profit growth. So okay, we will take some other example. Sharda Motor, Coal India also. Otherwise, one thing we will do, because here that 7 year figure is not given, I will change it to 5 year. So now I have just changed the filter to 5 year. So now it will be easy because that 5 year data is given. Petronet LNG, lot of companies are there. Symphony is there. So any company we can take for case study. Bajaj Finance, see this very large cap company. Just see here, this sales grown by 24% and profit grown by 29% in the last 5 years. But stock price has seen the growth of only 17%. So there is a gap. So these types of gap you can find out. So with the help of this formula. Otherwise, I will show you a lot of companies. 1 minute. Just manually that because we keep on tracking, filtering out these companies hereby. Sometimes you have also to follow. Sometimes manual work is always required. So, for example, I will show you one more. This platform is there, that is stock edge. This is also very useful. So some companies I will show you why it is not coming in the filter. Sometimes some minor due to some minor uh, these factors, these do not come in the filters. But whenever see, for example, in Biocon, see this is a very good company. So for example, you are studying this, you will check what is the sale growth of the company. Here you can check. Just see, in 2016, the sales were 3,300 and 3,900. The company doing sales of near about 15,000 crore. Near about 4 or 5 times sales have grown in the last 6, 7 years. And here in profits also grown from 600, 700 crore to near about 2,000 crore, near about 3, 4 times. But you will see the stock price is still where it was trading in 2018, it was trading at near about 300, 320. So just now just it has given some move, and still now it is trading at price of 350, 360 only. So there is not any big move. On the other hand, the sales has increased more than 4 times, and profits have also increased 3 to 4 times in these 6 7 years. So these are the triggered. As we have seen in the case of Captain Point Laboratories, the stock has just doubled, more than doubled in last 1 year. So there was a gap. Even in case of ITC, we have seen that was there. So lot of cases are there. So this here it has not seen the movement still. It is trading below its all-time high. One more company, the Birla Capital, is there. So here also you can see this all-time high of the stock was 264, and now it is trading at only 220. So it is still trading at below its uh, earlier high. But when you will see its financial results, here you can check. Even you can also check through the screener also. Just see in 2017, the sales of the company were only 6,000 crore, and now the company is doing sales of 36,000 crore. And now go to the profits. Here the company was doing profit of near about 700 crore, and now it is doing profit of near about 3,200 crore. Profit increased more than 4 times. So, but still the stock price is still it is below that level. So these are the gaps which you can use to identify the multi-bagger stocks. So this was also one of the strategy. So these types of strategy we use very simple strategies. Any person can with just simple calculation is there is a no big research work is required to apply these strategies, so every layman also can apply, because we all know the language of business. Sales are increasing, everyone can understand. Profits are increasing, everyone can understand. So these are some simple things that you can apply to identify the multi-bagger stocks. So a lot of other strategies are there that we have. I have just made a list of some of the strategies. Some, for example, when there is increase in promoter holding, these also you can use as a trigger point. For example, FI holding is increasing. One more thing, that based on bulk order. So sometimes what happens, a company receive a bulk order. So that also one case study I will share with you. So how you can identify on the base of bulk order? See, one company was there like RPP Infra, or we can take some more case studies are also there. So just first, what I say, first plot the price graph of this stock over a long, for a long period, maybe 10 20 years. So from this price graph, you can just observe in 2017, this stock price was near about 270 rupees. And here, when this company received one, I will share you the bulk order news. See, it was trading in May 2023 near about 40 rupees. So, what happens here into April 2023, the company received order of rupees 500 crore, near about 491 crore, near about it is 500 crore. So, this you now that when we checked at that time, the market cap of this company was only 160 crore. So I will do, I can just show you reverse calculation. So at this point, the market cap is 843 crore. So because the stock has gone 5 times from that level, that 40 rupees to 220 rupees, more than 5 times, even 5 6 times. So that time, if you will divide it by 1/5, then it will come out to be 160 crore, 170 crore. So this company with a market cap of 160 crore, so it is receiving an order of 500 crore. Just imagine. So more than 3 times of its market cap. And then you can check its quarterly results also. So this company was doing sales of near about, just let it open. My it is taking time. So, see, in 2000, last year, 23, this company was doing sale of near about 300, 250 crore sale was there. So that order was more than, it's a quarterly sales. So even then again, that factor we use, that price to sale, So that was also applicable here. This company was doing total sale of 1,000 crore on the annual basis, and the market cap was, as I done share with explain that with the reverse calculation at that time, only 160 crore. So this company is doing sale of 1,000 crore, market cap only 160 crore, and now this company is receiving order of 500 crore. That is more than its quarterly sales. Single order more than quarterly sales and more than its market cap. And you will also see these profits over the last 6 7 years. Earlier in 2017, when it was trading at all time high of 270 rupees, that time it was making profit of 22 crore. So now it is making that, it was making more profit from the profits where it was making in 2017. So after that, you can see how these profits increase have improved in 2024, and now it is making profit of 2062 crore. So and now the stock has also, you have seen, just within 1 or 1.5 years, stock has gone more than 5x. And lot of other case studies are also there. Premier Explosive, one company was there. So this also just 1 year back, here it was trading at 80 90 rupees. So just you can see from 80 90 rupees to high of 900 rupees. So 9 to 10x just within 1 year. 1 year. So you just you can note down here. So it was trading on 4th July near about 86 to 90 rupees, and it made it its all-time high of 908 on 21st June. So 9 to 10 times in just 1 year. So what happened in this company also, same thing, that bulk order. This company received a bulk order of just this news. 11th July, this company received order of 552 crore. So now we will also just check. It's now the current market cap of the company is near about 3,000 crore. So now this stock has gone near about six times from that level after making the high of 900 rupees. So this is near about 5 6 times. So it means that time the market cap was only 500 crore. So this company is receiving order of 500 crore. That is more than its market cap. And this company was doing sale of only 50 60 crore quarterly, and annual sales were also near about, last year in 2023 it was 200 crore only, and earlier it was doing sale of 150 200 and this company received order of 500 crore. That is more than its annual sales and more than its market cap. And now you can see this result, the stock has gone more than 9 to 10x. And one another thing that I discussed with you, this stock was even seen long consolidation from 2016 to here up to 23, 7 8 year consolidation was there. So this is the best thing. See, if you, for example, this company was trading at 900, already 9 or 10x, and the company is receiving order and this market cap of 3,000 crore, that we may not consider as a bulk order. So we may not be interested in this company. So, but if the order is more than its market cap, more than its quarterly sales, or maybe that, even in this case it was even more than annual sale also, that is a clear cut trigger for a multi-bagger like criteria. So these are some strategies that you can use for finding some multi-bagger stock ideas. So I have shared with you some of our strategies, and there are a lot of, there is not a single strategy. Different research analysts use different types of strategies. For example, even you can follow the government policies, what the government is doing. For example, when this central government banned the import of defense equipments, list of more than I think 900 defense equipments. Then we have seen a big rally in defense. And when the government focused on this railway, huge capex was announced during the budget of 2019-22. Then you have seen the huge rally. That also, that you can use. But this is these strategies are out of without any, maybe any, not related to the government policies maybe. See, sometimes what happens, these themes sometimes whenever we try to enter in these themes, we enter at a high valuations. So for example, maybe some people are entering in this artificial intelligence or maybe hydrogen theme, so that it is difficult that if we are not very much aware about the valuation. So for example, we have discussed Sona BLW, one Amtra technology was there, data pattern was there, so a lot of companies where lot of investors had entered in at higher valuation. So that in that case we have to wait for a long period to get our prices. So these are some of our simple strategies that we use and that you can also use. So if you want to learn more about these strategies, you can join with us. So thank you very much, sir. This was all about some brief I have shared.
Thank you so much, sir.
So
Any
I am also,
questions?
yes,
Any questions from the participants, please?
yes, please.
Yes. Uh, any questions?
Hello.
Yes,
Hello.
sir. Yes, sir, please.
Once more, can you show the criteria for the finding long-term consolidation?
Sorry, I didn't get your query. Please, can you repeat?
Sir,
Hello,
it's
sir. Hello. Hello, I'm Sanat Joshi from Raipur, sir. Am I audible?
yes, sir, it's audible.
Hello. Sir, one question is that suppose one company is performing well for some years and the profit is high, but on the same time, its stock is not rising price. But maybe the reason.
Okay, there may be any reason.
Stock is
Reason
not.
may be that yes, yes. Your point is that may be the reason. Reason maybe earlier the price, the valuation was high. That may also maybe the reason that stock was trying to discount. Just okay. Otherwise, we will take the example of ITC. See, for example, in case of ITC, that was not performing. Maybe the market was waiting for some trigger, maybe demerger, and maybe it's FMCG business was not doing good. That was in loss. But my point is, see, what we want in a business, we want that profits are increasing or sales are increasing. So that is instead of maybe you can also go for the reason also, but the problem is when you will try to find the reason, you will get some reason and you will not able to take the benefit of that gap. So you will attach to that reason. Oh, that is the reason, but market will start still that FMCG business may not be doing. I think still no demerger is there from ITC, but you can see the stock has more than doubled from 200 to 500, and you have seen this has how in large cap space this ITC has outperformed. Lot of case studies I will show you. That is good. You if you are able to find the reason, but that problem will be there. If you find the reason, you will not enter that stock. You will say, okay, that let us wait for that reason to get resolved. My point is simple. Gap is there, valuation is attractive. The sales increased more than double from 30,000 crore to 60,000 crore. So still, if you will doubt, then you will not able to make the money. That is my point. Reason may be there, but I want the reason is maybe there, but company is growing. My purpose is company is growing. I shared the Kaplan point, and now still I am showing that you some case studies like Biocon, AB Capital. So if you will go to find the reason, definitely you will find some reason because NBFC sector, this banking and NBFC is under stress. They are not growing. But this is the time that you have. That is the opportunities. When everything will get resolved, that prices will also be high. It is your choice. So if you want to buy a thing at uh, reasonable or attractive levels, then some negatives you have to accept. Some negatives, but that you can see these companies are good. ITC is a good company. Biocon good company. AB Capital is a very good promoter background. So this you are getting. I think these are blind buy, as per my view, blind buy. But maybe in some companies there may be some genuine reason, that if you can search out for these reasons, then if that reason is very maybe important, then you can maybe avoid that company. But otherwise, simple thing that I am discussing, some gap is there. The sales increase more than 5-6 times, profit increase 5-6 times. This is the only thing which we want from, and just you check that this company, even in recent quarter also, this AB Capital has shown good result, profit increase, sale increase. And if the stock price is not performing, that is opportunity. That is not, you should not take it as a doubt, that is opportunity. Stock price has not performed as per the growth of the growth in sales and profits. My point is this.
Thank you.
Yes, sir.
Thank
Any
you.
other questions?
So my another question is that is this strategy is for the person buying and selling within 2-3 days also for traders, like?
So this I in the beginning of this webinar I discussed, this is only for investors. These are not for traders. It may be that you may make profit within 1-2 months on the by using these strategies, or by using some technical this analysis you can make profit in short term. But the real term is these strategies work in long term. Long term is maybe 2, 3 to 5 years time period you have to consider for any investment. So for making some good or big returns, that period is required. 3 to 5 year period is required. Otherwise, you will be making 20%, 30% return on every stock, or sometime you may be making 30% or 50% loss. That will set off. So if you want to be in net gain in stock market, you have to make more than 100% return in a single position or your single investment. So then only you will be able to in net profit in the stock market, because some of the companies will give you loss also, may not give return out of 10-20 companies. So for example, some companies given 100%, 200%. So some company will be negative 20-30%. So if you are booking your profits with 20-30%, so that will, it is also possible that it will be balanced by your losses. So that is point. To make profit, you have to make a some long term horizon, maybe at least 3 to 5 years.
Hope no other questions.
Okay.
Any other question from any other participant, please?
Okay, one more before please, I am interrupting. Before closing this webinar, I would like to share, if any of you are interested in our services that we are providing as a SEBI registered research analyst, that you can also contact us for our services also, that we share these types of opportunities with our clients. So that also you can contact me. So this was one awesome announcement was from my side. So please continue. Yes.
Hello,
Yes, sir.
I'm Kumar from Chennai. One question I want to ask, just for academic. Is there any mechanism to find out abnormal multi-bagger stocks? It may happen, no, say due to insider trading. Once it happened in Tata Finance, you may be remembering. Anything like that in the screener, can we find out abnormal behavior of stocks and leading to the multi-bagger, what you call multi-bagger level? Is there any mechanism? Because it happened in Tata, the Princess case I'm talking about in Bombay. Because of the many audit reports, revision, all this happened in financial side. And so that's why. That means multi-bagger, it is giving multiple returns over a short period of time, correct? So is there any mechanism to find out like that abnormality? The real multi-bagger, okay, what you explained, we understood that. but abnormalities.
So,
Say one of the
uh,
reasons may be insider trading. How to whether we can get it? It may be
that
type of foreign.
insider trades are not allowed.
Hey,
So
correct,
these are
correct.
not in the
Sir, I
public
agree,
domain.
sir. I agree. Practically, it happened. You may be remembering Pence's case, Tata Finance. It happened. So
Maybe
like that.
some of the groups may be providing these insider information. So
Hmm.
honestly, we are not using any insider information.
Okay.
So but lot of instead of insider, even that I have discussed, you can use this lot of parameters. Increase in FI's holding. Just I will
Hmm.
just 1 minute. I will just not exactly reply about your query. But one thing, just I will show you lot of cases. This strategies that I say. See, for example, increase change in FI holding. Okay, I will
Ah,
just type here change in FI holding. You can
yes, sir.
this is
That
change
may
in
be one
FI
of the
holding
reasons.
is this is very even you can apply FIs, DIs and promoter also. This I am taking this example of FIs holding only more than 5%. Just you can put some market cap as a criteria, more than, for example, 1000 crore only. So just you go through this list. See, in
Yes.
this case, more per lakh. Just you are as you are interested in insider, instead of insider, go for the information which is publicly available. That is will also help you. See here from in June quarter to this quarter, this promoter holding has increased. Sorry, FI is holding increased from 1.67% to 7.72%. And just see how this stock price is performing. Just from here 60 to 90, 50% return is there. 50% return is there. So lot of even you can apply this query as a 1 minute uh, as 3 year also change in FI's holding on the basis of 3 years more than 5%. So lot of companies you will find out in this market cap is 1 minute. Okay, let us see Sona, BLW, Sun Energy. Lot of companies will come in this list. You can Newland Lab is coming in this. You have seen how this Newland Lab has performed. So these types of very simple filters are available that you can use. So this Orient Pro solution that is coming, how the stock has performed. PG Electroplast, you can see this how it has performed. So these are very simple things. Instead of searching for some these insider information, my strategies that we can use the information which is already available, that will also help. Even see Janus Power. Just I will show you Janus Power how this is performing. Just within last, you can see 6 months from April 2030, some 200 level. It has seen near about 460, 70 levels, and just see how this happened. But they happened here. In March 2024, the FI's holding increased from 2% to 16%. So these are some simple strategies you can use. FI's holding, DI's holding, or even here you can change to promoter holding also, anything. So even I have discussed how to filter out the companies on the basis of capacity expansion. These are the genuine basic reasons which where you can expect the growth. See where the company is doing capacity expansion, it means you can expect growth in coming 2 to 3 years. So these are also otherwise. See, honestly, we are not providing or we are not using any insider information. So if you are getting any insider that you can use, but I don't know any insider information. So even in instead of insider, that bulk deal, one thing, one is there also that you can use. For example, some daily bulk deal data is there. That will be see here. A lot of sources are there. You can get a daily bulk deals. In case of Forbes Precision, one bulk deal is there, and JB Lamination, Medi Assist here bulk deal is there by some mutual funds. So these also you can use. Some big investors buying that these birthdays also you can use as a positive trigger. So whenever there are some QIPs are there, so these also you can use as a trigger. So these big birthdays are given here. So these are some information which are freely available. So these you can use uh, for this multi-bagger hunting, you can say. So I hope this has helped you, but I am not able to give you the exact reply. So
No
okay,
problem. Thank you, sir. Thank you, sir.
okay, sir. Okay.
Thank you very much. All the best, sir.
Thank you. Okay, sir. So any other query, please?
Sir, I
I
think
think we can we have kept our time period as 4:30. So maybe we can close it now. I thank you, Gurvinder Malhotra ji, for your wonderful discourse. It has been appreciated very heavily by our members. You see, I think as I mentioned in the very beginning, we'll close sharply at 4:30. We start sharply at 3 o'clock. That is going to be our system. In PD side, we are now trying to engage our professional members for at least 3 to 4 hours in a month. This is the first Wednesday, what we have now done at around 1.5 hours. And then we are also trying to do some physical interactions every second Friday. We are just working on that. So I had requested that some more areas. So some people have mentioned to me about audit of stockbrokers, sugar factories, CMA project, mergers and amalgamations, concurrent audit, etc. And our members have also shown their worries about our place in DTC code, direct taxation. I can assure you that we are working on that. We have met Chairman CBDT also. Last week we have met. Mm, so we are trying to influence them that impress upon them that our members will definitely add some value. So as far as the today's lecture is concerned, you see, it is a very specialized topic. I will request that as I have mentioned in my chat box also, in our chat box also, that this is primarily for educational purpose. Since one of our member have gained some expertise into this and he has very kindly agreed to come on this. So it is primarily from that angle. Now, if we work out some series based on this, that our my colleagues in the PD department, they will work out, and then we will let you know about all these things basically. That is one point. And second is that we will be working on. We are looking forward to up to 3 to 4 hours of interaction every month with our members. That is going to be online, free of cost, basically. And for that, you have to really tell us certain topics. Few of you have told me mergers and amalgamations. And apart from that, this interaction was primarily to address your concerns as practitioners. So after one or two such knowledgeable talks, one Friday we keep for one Wednesday we keep for interactions among ourselves. So I thank all of you for joining us today, and I thank my colleague Nidhi in PD and other colleagues who have worked tirelessly for this. I welcome that if there are more people who can speak on more complicated areas, so that we can and we can enhance the knowledge of our members. This will be a great service to our own professionals. Thank you very much. And once again, I wish you all a very good professional times ahead. Thank you very much. Gurvinder ji, you will like to add something? Gurvinder ji?
Just in the last minute, I would like to thank you, sir, very much for giving me this opportunity to interact with our members, and I am very much feeling fortunate to share
No.
my
We are
knowledge with our
anybody for
members.
that, and this is we are actually strengthening our own members. We are
Yes,
strengthening
yes.
our own members. So we are also looking forward to one or two webinars on AI now, artificial intelligence, because people are continuously asking. I don't know whether you can share your PPTs. That is up to you, because many of the members are asking that if you can share your PPTs. That is up to you. And we will be working out on such more seminars in coming future. Thank you very much, Nidhi. We close in. We have 2 more minutes. If somebody will like to speak, most
Yes, sir.
welcome. Yeah. Right. So then we close, and I mean, this way, in fixed time, everybody is aware that there will be no time wasted. In 1 hour maximum, we will be giving you the feedback and then your interaction, and then we will be closing. So we are working on a PD calendar. Today we had a detailed discussion in our Lodi Road office. So we are working out a PD calendar so that you can plan your activities of a year. We are also working out on a national convention of practitioners. We have not done it last year. So this year also we are planning to do that. And in that we are making a certain uh, good suggestions we are going to make into that. Parallelly, we are working out with the Department of Company Affairs people and Central Board of Direct Taxes to make our voices known and make ourselves known into that. So I once again thank you for giving us this encouragement by joining every first Wednesday. Looking forward to see you next first Wednesday of October, which happens to be Wednesday 2nd of October, which happens to be a holiday. But we will bring on some good topics so that all of you can join from your homes. So thank you very much once again for joining us, and I wish you great luck and great success. Thanks. Thanks, Gurvinderji. Thank you. Special thanks to
Thank you,
you.
sir. Thank you very
Thank
much,
you very
sir.
much.
Thank you, sir. Thank you so much.